Hey YouTube, it's Victor from TRADEPRO Academy, and today we've got another YouTube video for you, and it is what is the best indicator for day trading futures. So we're going to go over the best indicator for day trading the futures market, the indicator that we use every single day when we trade live in our trading room, and why it's the best one in our opinion. So let's go ahead and start this video. Here it is, guys. You may be shocked, but this is best indicator or the two best indicators for day trading the futures market. And they are market structure. We always say market structure is king. That is the beginning of everything, and volume. So volume can be considered the indicator, the best indicator for day trading futures. And we're going to go through a few different levels of volume here, including volume profiles, actual volume, volume weighted average price, the VWAP on the Globex session, and inventory and the footprint. So all these could be considered volume, but they are volume in their own respective ways. So we're going to go through those and give you guys examples. But first and foremost, let's dive into market structure. So market structure is the king. This may not be an indicator specifically. However, it is a very important tool, so we had to include it here in the indicator level and in the indicator category. So volume is going to be our main indicator. That's it right there, guys. Volume is going to be the best indicator to day trade the futures market. Now, market structure. Let's go over market structure first and foremost. Market structure is very simple. It's the most basic tool. However, a lot of traders overlook it. It could easily tell you the direction of the trend. If it's in a bull trend, a bear trend, or a range. And the idea behind the market structure is you're looking for breaks. The breaks of the lines in the sand, your lines in the sand, in which you have two levels where above a certain price or resistance you start to look to buy dips, and below a certain price or support you start to sell rips. Now market structure and trend are very basic. They are the fundamental resource of day trading, especially in the futures market. That doesn't mean it's only limited to the futures market. Honestly, market structure or price action can be used in any single market, and we advise you to use it in every single market that you may day trade, which may be stocks, forex, cryptocurrencies, and of course futures. So market structure, higher highs, higher lows, that is the bear structure. We're going to go over that soon. The idea behind the bear structure, higher highs, higher lows, that's the bull structure. So behind that market structure, the bull structure, we just look for the continuation of the trend. And once we stop printing higher highs and higher lows, then we may get a reversal and that trend breaks. That's what I mean here when I have market structure and trend, and then bull trend and breaks, bear trend and breaks, ranges and breaks. So you're also looking for the break of the market structure and the continuation in the different direction. So that's very key. We're going to go over an example with you guys very shortly, but market structure is the overall trend decider, and it really helps you keep on side of the right trade idea. Now we promised you guys an example, and here it is. We're just going to be looking over basic market structure. Now we're using July 16th here as an example of what market structure looks like. And as you can see right here off the open, this is the open here. It starts and we do print a range. It starts bouncing in between these two levels, and what we could consider this is a range that we sell at the top and buy at the bottom, or we could consider these two are lines in the sand. Now we want to see a clear break of the upside and then retest to the downside for a continuation higher, or a clear break to the downside and a retest of that resistance for a continuation lower. Now, right here, we do manage to break. This is off news and how market structure works. We like to now, how we like to use market structure here is we want a significant break. So it does break to the upside here. It comes in, comes down aggressively. No real rotations for the move higher. Now, right here, it breaks pretty significantly, finally a rotation, and with other volume indicators here that we will talk about shortly, you could find a potential short entry back in the retrace. Now, what we're looking for is just lower lows and lower highs. Now, it drops pretty significantly, and it is pretty difficult to catch this whole move. However, we do manage to stall here and come back into our resistance zone. So this is our new level. Should we come back and retest this zone right here, previous lows from a previous level, we should be able to find a short idea for the continuation lower. Now, lower lows, lower highs. Ideally, we draw another line in the sand right here from our previous low, And we should come to retest that area for another print lower, lower lows, lower highs for the continuation of the bear trend. Again, another short idea entry, and this is the new low. Now, this is the new low once it comes in and drops down into that area. Now, for the next move, if the bear trend should continue, we don't really want to see price come too much above this previous high. That's not lower lows, lower highs anymore. It does, this may be the last chance for the shorts. However, when you see it drop down this time, you can see, is this a lower low? No, a lower high. Now market structure breaks to the upside, to the bull side. Now what we're doing is buying dips at each retrace. Pops higher, comes back up near this previous resistance area, long idea, and so on. Now the next line in the sand could be right here, this previous peak. As it comes into this resistance, you want to see it drop, rotate maybe a few times, and continue to the upside. And however, it does not and drops right through, and that is the change again in bear structure. So it's very, very important to watch market structure, even though it is not an indicator, it is a vital source in trading and in trading futures. So we're going to consider that number one, first we need to know the basics in market structure. Now, going into volume and volume profiles, this is the indicator of the day. This is the best indicator to use to day trade futures and other markets even. So we're going to be looking at the day session volume profile, the 5-day volume profile, the trend volume, the VWAP inventory, and the footprint. So these are a lot of volume indicators here, but they all fall under the volume construct. Now, what are each and every one of them? Let's take a look. Right here, we've got the same image in front of you. However, you may have noticed that we've got a lot of things on this. First things first, the daily volume profile right here in the light blue. Next, we've got the 5-day gray here on the right. At the bottom, we've also got the trend volume, which I like to call, and finally, the red and blue boxes are going to be our inventory. Now, what does inventory really tell us? It doesn't tell us exactly what's been traded, but the interest. Now, I do consider that somewhat of volume because it is the inventory amount on the ladder, the level 2 trading. We also have a very, very good video on that. Go check it out at TRADEPRO Academy YouTube. So that's these boxes here, the blue and red boxes, are based on L2, level 2 trading on the dump. Now first, let's go over the daily volume profile. The volume profile, first of all, is an area which a price area which a lot of volume has been traded. So the more extended the volume profile, the more volume has been traded at these levels. Now, you can consider these low volume nodes to be support resistance levels and these large volume nodes to be attraction levels. So throughout the day, right here, assuming that this drop hasn't happened yet and this is the volume that we get. So there's a lot of volume in this range, no doubt about it, and there's less volume at the edge of the range, which will hold as support and resistance levels. As they break down and price drops through, we're going to see them hold as support and resistance levels yet again, and a lot of volume starts to shape up here, and the low volume nodes act as support and resistance levels. Again, on the 5-day, this may be a lot more useful to some traders because it measures 5 days of volume, and you can see the nodes very, very clearly, the low volume areas, and they're going to act as really, really strong areas of support and resistance, and the large areas, huge areas of attraction for price. Now, finally here, we've got volume to the downside here, the trend volume. So the volume on each move should be measured very, very carefully. On this downtrend right here, you can see it starts right here until about here. We want to see how the volume is right at those levels. So if we draw a line here and here, it's decent volume, but it's not really ramped up that much. You don't really see that much increase on the volume side as price drops. Now, however, you can look at these micro trends individually here and kind of weigh out, all right, on the drop here, very weak volume, so we could consider that the uptrend is the right trend for the time being. Now, on this last swing higher here, you can see volume kind of died out a little and then started ramping up on the drop lower. Now, this can be used not just on futures, on day trading stocks, day trading crypto, a little more difficult in day trading Forex since you don't have this exchange volume, but like we've mentioned in many videos, volume is key. It tells you the strength of the trend and where price will go. If the downtrend holds weak volume, we do expect a move higher, as we saw in these little microstructures and micro trends here. Now the final piece of this picture, this puzzle, is going to be inventory and the L2. Like volume, inventory attracts price. Huge inventory levels are huge levels of attraction, just like the volume profile. As you can see, this huge volume node holds a lot of inventory attraction, the bid side to the downside, and price goes to test that level. As these bids continue dropping lower and lower and getting filled, that means the downside is the right side and there's a lot more selling going on. These could be sell stops to the downside. Now the offers, as they move lower and don't get filled, that just means that there is a lot of sell interest at these areas. The more they don't get filled, the more aggressive selling comes in. Then finally, once they get filled and these bids stop to get filled to the downside and start holding as support, you can see the reversal, as is the case here. If you want to know a lot more about that, come join us at TradePro Academy, all about L2 trading and inventory. You can get a sneak peek on our YouTube channel as well. Now, the last piece of this puzzle is the actual volume traded on a footprint chart. So we're just going to give you an example and check that out soon. We've got a video on that as well on our channel, and an extensive market structure and footprint video at TradePro Academy. Now here it is, the footprint itself. So you may have seen or heard a lot about this, but this is the actual volume traded at a certain level. So you can see we've highlighted the sell imbalances here, which are actually large bid orders hit through market all at once. So that's what those mean. And right here, right here, the green ones, the green imbalances are large offers. So you can see we've overlaid the L2 trading type or the inventory heat map overlay onto these charts as well to give us a better indication. And of course, with market structure, these zones, you just combine it all and you've got a winning strategy on your hands. Now, how to use the footprint. Again, we've got an extensive video, but we're just going to show you right now quickly. The more sell imbalances you see on a downtrend, that means more sellers ideally are coming through. And another thing to note is the high volume nodes, where there is high volume. On resistance levels, high volume accumulates. That means it'll hold pretty well. If high volume supports the upside on an uptrend, then you could construe an upside idea. Along with these buy imbalances, a lot of buyers coming in supporting market price higher. You can see right here, high volume node, high volume node, high volume node, all supporting price down here with a lot of buy imbalance. Now right here, as we ramp up, you can see the high volume nodes begin to form structure and start to support price even higher. All these sell imbalances that come in get quickly absorbed by buy imbalances in high volume nodes, and you can see these bids aggressively coming in, clearing offers to the upside and attracting price higher and higher. Right here to the upside, you can see from here to here, there's no real buy imbalances, which kind of led us to somewhat of a fade idea right at this top, as price just toppled over right where that VWAP is. So it's another area we're going to talk to you about, the volume weighted average price. So this is like a moving average based on volume right here. So this is going to be a really, really strong area of resistance and support that we use time and time again. You can notice that there are a lot of rotations around the VWAP area that we use in our charts, and especially this one. So if we go back, you can kind of see in this picture how it maps out and how it holds resistance. However, if we go back into this example right here, you can see every test of the VWAP, there are rotations that hold and the VWAP continues to the downside, showing us the momentum of the move and acting as a very strong level. Now, if we get a peak above the VWAP would ideally hold as support, and again, you're using market structure and other volume indicators to help you build a trade idea. Now that was a little bit about our favorite day trading indicator and what we think is the best day trading indicator out there, and that is volume. I hope you guys really enjoyed this video. Volume can be seen in many different ways. We did explain it to you in this video. It's not just volume of the trend, but you can use volume profiles, the VWAP, inventory, L2 trading, and the footprint. So along with market structure, you can use volume to give you that trader's edge and really identify where that trend is going and the strength of that trend. I really hope you guys enjoyed this video and this Victoria from TradePro Academy. I'd like you guys to like this video, comment down below what you think and what you want to see next, and hit that subscribe button, hit that little bell to notify you when we do go live and we do actually trade the futures market every single day. Take care.